In fact, let's connect with Karan Taurani, who joins in from Elara Capital to give us more insight on the numbers. Karan, let's begin with the headline numbers. It's not expected to be the best set.
So it's expected to be a very muted quarter, as you rightly mentioned. There is a TRAI order negative impact, which is clearly standing on the broadcasters. What exactly happened in the month of Jan and Feb was a major disruption. People did not move to the new TRAI order because of higher amount of pricing and higher ARPU payout, which was there. It happened with time where, probably, Q4 was a quarter where you saw about the worst of the TRAI order getting impacted because the subscription revenue growth in that quarter was about 4% odd. And this quarter around, the expectation is about 10 to 12 odd%. So definitely things are improving on the right track, but not to the fullest extent even now. I think 2 more quarters more left for things to come back on track exactly because of the TRAI order. Plus the TRAI order also has a spillover effect on the advertising revenue. So if you clearly know, advertising revenue is something which follows with a lag. So once you have a viewership data which is ready, 6 to 8 months after that is where you see the positive impact or the negative impact in terms of your pricing based on the viewership share which you have. So even that is getting really massively negatively impacted because of TRAI order in the last 2 to 3 months. And I think that's why, this quarter around advertising growth is pegged at about, 5 to 6 odd%. And that's going to be slightly muted as well. So I think there's still some time more until we see the full recovery for the broadcasters.
More than the earnings, Karan, do you think there's clarity that the market wants on the deal? What's happening there? I think that is the big overhang on the stock, isn't it?
Definitely, it is an overhang. So if you see the multiples, I think, after the announcement was there of the strategic partner in the month of October until now, there's been a massive correction in the PE multiple without any reasoning. The numbers have been good, but the multiples have just got derated without any reason. And the bigger factor here is the deal being delayed constantly. So the management pointed out a deal to be done by about March, April, then move to June, now to July end, and we're almost at July end and still there's no clarity of the deal being announced. So that's definitely having a negative impact on the multiples right now. With the multiples today is about 16 and a half times 1 year forward P. But definitely any kind of small positive announcement on the deal front, like for example Puneet Goenka being on the board himself after the strategic partner thing, can be a big respite for the stock, and that can actually see a at least a near-term rally, if not a medium-term kind of a thing.
Okay, they're also dealing with a slowdown in ad revenues, battling for subscriptions in the OTT space. So, what are the biggest challenges or pain points as you see them, and do you really see any potential right now for Zee?
So Zee, if you see in the broadcasting piece, they are doing really well, but within that as well, they're not doing well in the GEC part at all. So if you see the likes of Star, Colors, I think they are the ones who are the more of the leaders in the Hindi GEC market. But Zee is very well placed in terms of the Tamil market, Marathi market, Bangla market. These are their strengths. And if you ask anyone in the street in terms of industry experts, I think regional GEC ad growth is something which is poised for stronger growth versus the GEC. So in terms of the TV broadcasting pie, I think the regional is something which is driving growth for them, and they're going to outperform on that front just because of the regional part. In terms of digital, I think ZEE5 is fairly done better than what they have done in the past, like Ditto and Uzi were big mistakes. So ZEE5 is definitely much better than what they have done in terms of digital strategy in the past, but it's still not up to the mark, because today the market is so tough. You have competition the likes of Netflix, you have competition the likes of Amazon, Hotstar. The kind of budgets these guys are making for content, like for example Sacred Games was made at a budget of about 1.5 crore per episode. So this is the kind of budget they're spending. Now if Zee goes and spends this amount of money, it's going to have a huge negative impact on the margin front. So Zee today also, despite ZEE5 being one of the better OTT platforms in terms of Zee themselves, it is not there in the top 5 anywhere right now. It comes below Hotstar, below Amazon, below Netflix. So I think if you want to be in the digital race, you have to be in the top 3 or top 5, or you're completely out of it. So I think they really need to work more hard in terms of the content investments more than anything else for the digital part.
I just wanted to get a take from you 2 things. If it were to be a financial investor for Zee Entertainment when it finally happens, would the street be a bit disappointed? Do they want a strategic player? And what's your target?
So definitely, financial investor, the street would be disappointed, but I think the disappointment is already factored into the price. As I told you, the multiples have got derated. But the only thing the street would look for right now is, Puneet Goenka or someone from the promoter guy really being on the board and really making all the decisions right now. So more than the financial, the strategic partner is something which does not matter now at this point of time. It's only basically someone from the management to be on the board right now. So if someone of that sort is there, then definitely be a positive surprise on that front. In terms of rating, currently we have a accumulated rating on the stock, and we have a target price of about 410 rupees. And probably after this quarter, since the deal is getting further delayed, we might also derate our multiples from here on.
Okay. Thanks very much for joining in and giving us a roundup on Zee Entertainment. Closely